Well, for more on India's economy, I'm joined by Ankur Patel, co-founder and chief investment officer at R² Macro. Welcome back to the show.
Thank you for having me.
So as we saw, the Reserve Bank of India decided to keep the key interest rate unchanged and lower growth forecasts as the country adjusts to Prime Minister Modi scrapping some of these high-value rupee notes. What do you think of this move?
Well, from our perspective, we think that the Reserve Bank of India will cut rates eventually. We think that in February 2017, they will cut rates by as much as 50 basis points. I think the reason they did not cut last night was primarily due to the fact that the Federal Reserve in the United States is expected to raise rates this month. And by delaying cutting rates, the Reserve Bank of India really gives itself more flexibility once it figures out what happens in the aftermath of not only that rate decision, but also the currency ban within India.
So while the bank has this breathing room, this was actually an unexpected decision, especially for some in the business community who were really expecting a rate cut to offset, especially this cash crunch. So how is the business community reacting to the Reserve Bank's decision?
I think the initial reaction has been very clearly negative. I think you're right. I think a lot of people expected the RBI to cut rates to support growth. But from their perspective, the effects of the currency ban are going to be transitory. The effects are going to be certainly negative for consumption over the next quarter. But longer term, because they will lead to more Indians joining the traditional banking sector, they'll increase bank deposits, they'll increase lending, they'll increase borrowing on behalf of consumers, and ultimately consumption will actually be greater a year from now, potentially, because of the currency ban than without it.
So as we look at Indian businesses, consumers, and even trade partners who are kind of navigating this adjustment period for the rupee, who would you say are the biggest winners and losers in the short term?
I think in the short term, certainly the real estate market gets hit particularly hard because a lot of those transactions were based very much on cash being dealt under the table. I think traditional consumer markets, retail sector like the trade in jewelry, trade in gold, things like that will certainly get hampered. Tourism certainly will get hit. But I think the sectors that really benefit are financial industries. They're the ones that will benefit from the shift to the traditional banking sector, to mobile payments, and we look to that sector really over the course of 2017 to benefit.
And as we look at the financial tech sector, who do you think some of the investment, where do you think that's going to be coming from as people really see this as an opportunity in India?
We think a lot of the investment may actually come from big investment players, firms globally. Certainly investment on behalf of Chinese firms like Alibaba, even certain players in the United States. They could really back mobile e-payment providers within India, because those are the ones that are going to benefit the most, not only over the next year, but over the next 5 to 10 years.
Now, what about some of the things that India should be aware of? What are some of the key economic challenges that really still need to be addressed?
I think there are a number. I mean, I think on the negative side, only 50% of Indians even have a banking account, right? So it's going to take some time for the financial technology sector to really take advantage of this shift to e-commerce. Only about 10% of Indians have a debit card or a credit card that they use regularly. And again, the GDP per capita of the country as a whole is low. It's certainly half that of China, for example. So it's going to take some time before there's really true great uptake. And then finally, financial literacy is still very, very low. A lot of people have been very skeptical of the traditional banking sector, of the credit card market. So that's going to take some time as well.
And just quickly, one of the things that we're seeing is this contribution from rural consumption versus urban consumption. What role do you think that's going to play in India's growth going forward?
I think more and more of the consumption behavior will drift towards the urban markets. I think those markets tend to be younger, they tend to be wealthier, and they're going to adopt e-commerce. And we think because of e-commerce's potential there, consumption is going to pick up very, very, very rapidly. Whereas the rural sectors, the rural markets where cash was required and will still be required in the future, that's going to be hampered still.
All right, thank you as always for your insights. Ankur Patel, co-founder and chief investment officer at R² Macro.